In most cases, penny stocks are considered to be pure market wagers that are only suitable for extremely experienced gamblers. On the other hand, there are a few ideas that come out in this portion of the market every once in a blue moon that might be worth a true investment. It is possible that early bird investors will receive big profits from these high-risk businesses over the course of time. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about the top 5 penny stocks for long-term investment. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 5. Septin. Speculators of penny stocks should take into consideration the technology company Septin because breakthroughs are being made not only in transportation and mobility, but also in the comforts that are underlying these advancements. Septin offers cutting-edge, intelligent, lidar-based solutions for a variety of markets, including the automotive industry, smart cities, smart spaces, and smart industrial applications, among others. Septin will, without a doubt, be associated with serious dangers. Septin, like Solid Power, does in fact generate revenue through its operations. On the other hand, it is on a very limited scale. For example, the company's earnings report for the third quarter of 2022 stated that the company's sales were barely $1.8 million. This number needs to be significantly increased at some point in time, and it is likely that this will happen quite fast. In addition to the dangers, Septin's financial sheet bears a level of stability that is only average. The company's Altman Z-score of 5.46 indicates that there is little risk of it going bankrupt. On the other hand, it is taking on a greater amount of debt than the normal business operating within the sector. Notwithstanding this, Gus Richard of Northland Securities anticipates that CPTN will reach $4 per share. This would indicate that there is potential for an upside of roughly 248%. Number 4. Dragonflee. Dragonflee is a company that specializes in unmanned aerial vehicles, UAVs, and claims to be the industry leader in terms of hardware, software, logistics, and services dealing with UAVs. DPRO is one of the penny stocks that is associated with an industry that is experiencing rapid growth. Allied Market Research estimates that the unmanned aerial vehicle, UAV, market segment reached a valuation of $24.72 billion in the year 2020. It is possible that the sector may reach a global value of $70.91 billion by the year 2030. The discounted profile is yet another aspect that sets DPRO apart from other penny stocks because of its unique characteristics. According to the unique calculations used by GuruFocus.com for determining fair market value, FMV, Dragonflee is regarded as being considerably undervalued. The market places a trailing multiple of 8.42 on DPRO, which is an objectively determined price. Dragonflee is ranked higher than 87.86% of the other companies in the industry when it comes to earnings discount. Additionally, the UAV business has a solid balance sheet to showcase its success. Its cash-to-debt ratio, for example, is 23.54 times, which is far higher than the ratio of approximately 84% of the industry. In conclusion, Scott Buck, an analyst at H.C. Wainwright, forecasts that DPRO will reach $3.50 per share on the market. This corresponds to an upside potential of more than 87%. Number 3. Adthe. The significant slowdown that occurred in the digital advertising sector throughout the entire 2022 was detrimental to a number of high-level businesses, including Meta Platforms. With the help of machine learning and data science, Adthe is able to provide advertisers and marketers with value that is applicable in the real world, which might potentially help to correct such a situation. Among the intriguing penny stocks, Adthe is one that warrants additional examination because of the tremendous rise in interest in digital intelligence. Adthe does not have the poor financials that are typical of many penny stocks, which is another factor that contributes to the allure of the company. On the contrary, the balance statement reveals that it possesses many excellent characteristics. Its cash-to-debt ratio, for example, is 8.71 times higher than the ratios of 72.32% of the other companies in the industry. Also, the Altman Z-score of 6.08 indicates that the company has a very low danger of going bankrupt. To make matters even more complicated, the current market price of Adthe is 3.55 times its trailing multiple. Adthe is ranked higher than 93.32% of its competitors when it comes to the discount-to-earnings ratio. Taking a look at the street, Needham resident Laura Martin recommends that Adthe be purchased. The expert also forecasts that the price will reach $3, which indicates that there is a nearly 80% possibility of an increase. Number 2. Jes Holdings. While Jes Holdings is not a particularly fascinating business, it is a good option for investors who are looking for penny stocks that have the potential to grow in value. Jes is a Jordanian company that produces and exports ready-made, customized items of outerwear and sportswear. It boasts an impressive clientele list that spans the globe and includes some of the most well-known businesses in the region. It is important to note that Jes is subject to pressure from the consumer economy. To give just one example, Jes lost close to 35% of its share value in the preceding company year. The shares, on the other hand, have increased by more than 17% since the beginning of January. Because Jes is the foundation of a number of well-known companies, it ought to basically continue to be relevant. In addition, the organization has a profile that is appealing from a financial standpoint. A good example of this would be the fact that the market values Jes at a trailing sales multiple of 0.4. When it comes to sales, Jes is ranked higher than 70.11% of the other companies in the industry. Also, the current market price of Jes is 0.81 times its book value. Jes performs satisfactorily in comparison to 66% of its competitors on this metric. Michael Baker of D.A. Davidson has just made a buy recommendation for the shares. Additionally, the price objective that the expert has set is $7, which indicates that there is a potential for an increase of more than 51%. Since this is the case, you should keep an eye out for it as one of the best penny stocks. Number 1. Sghc Limited. Sghc Limited is a company that specializes in a sector that is somewhat contentious and is connected to the worldwide digital gaming business. In spite of this, the chances for the upside appear to be potentially extremely rewarding. Grand View Research predicted that by the year 2022, the global market for sports betting would be worth $83.65 billion. Furthermore, analysts there expect that the market will rise at a compound annual growth rate, CAGR, of 10.3% between the years 2022 and 2030 within the time frame. It is anticipated that the market will report a total revenue of $182.12 billion by the time the period in question comes to a close. There is a possibility that Sghc could succeed in riding the coattails of this captivating niche. On account of this, it is considered to be one of the best penny stocks to speculate on for the long term. The market puts Sghc at a trailing multiple of 6.48, which is an alluring indication. Sghc is ranked higher than 86.29% of the other companies in the industry when it comes to earnings discount. A cash-rich profile is the most notable of the enterprise's fantastic qualities on the balance sheet, which also includes other excellent characteristics. In addition, Bernie McTernan, an analyst at Needham, recommends purchasing Sghc. Additionally, the expert forecasts that the price of the shares will reach $5, which indicates that there is an opportunity for an increase of approximately 29%. That's the end of the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.